Good morning, everybody. Good afternoon to my friends in Europe. I am Mark Sebastian. I am your only option. Welcome to the state of the market. And if I seem extra excited today, it's because I am. Tonight at 7 p.m., Hannah and I are finally going to be revealing what we've been working on since September of last year. This is going to be a lot of fun. You're going to learn a ton, and you're going to walk away going, "Wow, this is awesome." So, if you have not registered yet, and I know most of you have, if you have not registered yet, even if you can't be there, you need to register because the replay is only going out to people that register. You must. And I'll tell you why. There's some real proprietary stuff that we're going to be laying out. So when you sign up, if you want to share my screen, Justin, when you sign up, or Christian, I don't know who's, you're going to see, here's the landing page. And, I'll put in my email. And there is a confidentiality agreement. Now, don't worry. It's going to be fine. Trust me, but this is going to be worth it. All right. So you sign up with the confidentiality agreement. You agree. Oh, you got to click I agree to the webinar. And then you click I agree. And then you're all registered. So then go to add calendar so that you don't forget, because you are not going to want to miss this. You are not going to want to miss this. So today I'm going to look at earnings and what's happening and what kind of market environment we're really in, what's getting paid and what is not. And we're starting to see a trend. And I'm going to make a bold prediction here. So we had Meta earnings last night. It's currently up 12%. An absolute, and Meta's already been having a pretty nice run since April. It's now at a new all-time high. It has eclipsed the highs from back in February. It's up about 12%. So this Meta is now approaching a $2 trillion company. Microsoft, well, now only up $25, still up 5%. It's going to be the next. If it holds here, it's going to be the next $4 trillion company. Quickly catching up to our friends NVIDIA. NVIDIA should just be soaking up this news. See, it's up another 1%. AMD is. It's up $1.30. So just kind of looking at, starting with Microsoft, looking at what the market was expecting versus what we're getting. The Microsoft was pricing at about 5% move. It was up 10% earlier. You had an opportunity to take your money. It's kind of meeting that expectation here. And looking at Meta, this one's going to be a little more astounding. Pricing at about a 6.5% move. It is moving twice as much. Now, what made these companies move like this? One, their earnings were phenomenal. But price movement is forward-looking, not backward-looking. So those earnings, as phenomenal as they aren't what was the root cause of this. They've been up, but not like this. So what is behind this? Let's go back to Google. Google reported last week. It's trading $195. Off a little bit because money is flowing out there and into this, but they're all the same group, right? So let's take a look at their earnings from the 23rd. And I want to remind you what happened. Here's a 10-day chart. And where I want to hone in is its earnings. So you can see it was kind of flattish, downish. After hours, I can pull this up. I'm going to go to, there we go, 10-minute chart. So here's their earnings. All right, this gray bar is what happened after earnings. Now, Google did not report the best earnings ever. And you can see it initially drops from 190 down to 185. Then they get on their conference call and the stock explodes higher. Gets up to 197. $12 move in relatively docile Google. What was behind this move? What was behind this move? This move higher. William says AI. Rawhide has it. He says more AI investment. I said last week, oh, there's something going on because Google's rewarded for spending money. If GM announces they're going to spend $10 billion building auto plants in the United States, what happens to GM? What happens when a big industrial firm announces that they're doing a big capital spend? They get crushed. Right, William? So here we are. Google ups their investment into AI by $10 billion and it rallies. Well, let's translate this to Microsoft. Here's their earnings and them announcing they're upping their AI spend. Meta, same story. Up in their AI spend. It's up 12.5%. What's up? Oh, thank you. My wife just reminded me it's National Intern Day. So I'd like to say thanks for being our interns, Grant and Noah. You guys are both great. There you have it. Big blonde hair, always dropping the knowledge bombs on me. So getting back to our the discussion at hand, both these companies rewarded for AI. All right. When was the last time we saw this kind of rush from the market? Now, I think Hans and myself have made a strong case this is not the same as the internet bubble of 99, 99, 2000. However, there are some areas where there are some overlaps. And this is going to take me more back to 96, 97, 98 than 99, 2000. When firms were announcing their move to cataloging stuff on the internet, when new internet firms were announcing big spends, big investments. That period of time, that was back when there were 10 search engines. You had Ask Jeeves, you had Yahoo, Lycos, Excite, Netscape, and of course, Google. All these firms competing and investing in AI. People got excited. Stocks went up. Again, this is not the internet. This is bigger, more powerful, more life-changing. It is, to quote my Christian that works here, it's the Transcontinental Railroad. This is the American interstate system being built in terms of the way it fundamentally changes the economy. This is the airplane. This is what that is. Now, what does all this have to do? So, a little bit of what we're seeing is there is some kind of rising tide lifts all boats, even if some of those boats don't need to be lifted. So it's not just Meta and Microsoft that are blown higher. There are some names that may be less deserving of praise. Carvana's up 20% today, folks. Now, I'm not saying, let me go to Carvana's up 20%. Take a look at the path of this stock over the last 5 years. It goes from an August 2021 high in the high 300s, gets into the single digits in 2023 and is now $410. So this is indicative of what AI is actually doing to markets right now. All right. AI is pushing kind of the whole market higher. Another company that reported today is Hood. And again, more muted. I think when I look at Hood, I'm seeing a stock that's probably fully valued. It's worth almost $100 billion. And their EBITDA is $1.57 billion, giving us a PE of 55. So there is definitely some frothiness. So now let's look at the earnings that are coming up today. What earnings are coming up tonight that matter to you guys? I've got a couple in mind that maybe you've heard of. Microsoft reported last night, Steve-O. Cool Hand Vic says Apple, and the other A word, Amazon. So I want to start with Amazon. Amazon is going to have a similar narrative, I believe, to Microsoft and Meta. Why? They've invested AI heavily in their cloud services, in what they're doing with Amazon itself. It's going into delivery. It's going into managing packages. AI and then robotics are going to make Amazon I think eventually the biggest company in the world. Now, heading into these earnings, Amazon is pricing in about a 5.6% move. It has been moving less than what is priced in as of late. Which tends to make me think there may be some pent-up demand. It's kind of sitting right at that all-time high, a little bit below. The high was in Feb. If things go according to the plan, Amazon's going to be $250 tomorrow. Now, am I going to be buying Amazon ahead of earnings? What do you guys think? Am I buying Amazon ahead of earnings? No, I'm not. Why? We don't play earnings. Earnings are for suckers. But I think this is one that's going to be higher. Let's put it this way. I'm not selling my Amazon position, which is the stock side, ahead of these earnings. Feel pretty good about that? I feel pretty good about that. That leads me to Apple. And I am going to make and I want to show you, when I've been talking about Apple as dead money, I haven't meant that it's going to zero. I haven't meant that it's going out of business. But I want to show you this. All right, this is a 2-year chart. In the last 2 years, Apple is up 6.5%. Now, you paid as a dividend. Pays a dividend, but it's up 6%. Google's up 46. Amazon's up 60. Microsoft's up 75. Meta up 145. If you want to go out 5 years and say, Mark, that's not a big enough time. Then you've got Amazon that, had been over the last 5 years, Amazon is underperforming Apple a little bit. But trust me, if I go back over the last 25 years, Amazon's the leader of all of these. And I'm not throwing NVIDIA in there because NVIDIA is not the same as these companies. Look at Google and Microsoft and Meta doing almost twice the performance of Apple. And over the last year, Apple's down 6%. Google's up 13. It's the laggard. It's still doing 18 basis points better. Microsoft and Amazon have performed really well. Meta, obviously, up 63%. Why? Because Apple, and I'm not saying to short it, right? I'm saying it's dead money. There is a difference. I'm not. Dead money is Verizon. It's your utility. All right. It's a place you stock your money and collect dividends. Put it on a drip. Unless Apple comes out and says, we're buying AI company blah. Apple is going to fall further and further and further behind. I will say this one more time. Tim Cook needs to go. And Vicky says, you know, Snapper, what happens if Apple announces their earnings call that they're jumping into the deep end of an AI pool? Great question. And Vicky brings up, well, they're poaching. Some of their AI people have been poached. How is Apple having their AI people poached by Google and Microsoft and Amazon and these firms? How is that possible that the company with the largest cash position in the entire United States, out of any company in the S&P 500, how is it possible their AI people are being poached? It's because Tim Cook has his priorities wrong. He's worrying about returning capital to shareholders when what he needs to be doing is dumping money in AI and getting on board. Now, their earnings call, he changes that, announces they're buying I don't know who. Then my opinion changes a little bit. But they are so far behind that they're going to be left in the dust. Michelle says, are you passionate about that, Mark? I'm passionate for you guys. Right? Ask me if I own any Apple stock anymore. No. No, I don't. And it's because of this chart. It's because of this chart. So the firms that have jumped into AI headfirst are crushing it. I do have a old iPhone. Not saying I won't use an Apple phone. Not saying I wouldn't use, Apple Pay or something. I'm just saying I don't want to own the stock anymore. There's a better place to put my money. So what does all this mean? All right. One, I think we're at the beginning, and Hans is going to talk about this tonight, but you want to show up a little early because Hans is going to be on. We're kind of entering a golden age for the market. Apple's not going to be a part of it. All right. Apple's not going to be a part of it, but we're entering a golden age, and you're seeing a lot of money come out from the sidelines. You're seeing the volatility index back at 15 consistently. And I'm telling you, we've got Apple and Amazon tonight and non-farm payrolls. If it goes the way I expect, I think the VIX will be near 14 on Friday. And this environment is drawing in more people and creating more opportunities. Now, one of the things I love about this environment, And one of the reasons why the timing of what I'm bringing out tonight is so perfect. Now, what I built is going to work in just about any trading environment. Sans maybe the VIX going to 200. It works great in the environment that we've had going back to March and April, though. And, you know, May, June, July, when the S&P was still flying around. All right, let me go back to. All right, look, May, things were still absolutely flying around. Now, we did start rallying here. VIX was still 18, 19. What I did was what I put together works great in just about any environment. A 14, 13 VIX combined with what I built is like throwing Kyle Tucker a fastball down the middle when he's looking for it and losing a couple miles an hour off of it. You know, you're trying to throw a fastball 98, you know, high and a little bit outside, upper right-hand corner of the plate. And you miss down the middle and you threw it 94 miles an hour. What is Kyle Tucker going to do with that? He is going to send that on to Sheffield Avenue. So, in the environment we're in, and with what I'm seeing in this market, our timing could not be better. And your timing cannot be better. So, what I would encourage you to do is to sign up for tonight and join me and Hannah. Hans will be hopping on around 6:55, or excuse me, yeah. Hans will be hopping on in between 6:50 and 6:55. He's got some really cool things to talk about to kind of open things up. So show up early. And then Hannah and I will hop on and you will learn everything. Snapper Baker says, Mark, what prompted you to research this idea? And I would answer that now, but I know I'm answering it tonight. So I will respond to you when I'm done here. Yeah, I absolutely like Palantir in this environment. All right. So folks, one last time, register for tonight and join me live. Because we're going to have some fun tonight, guys. And I'm going to be teaching you, and I'm going to be revealing something that I have been, like I said, working on since going on a year. Is John Carter my neighbor? No, he is not. All right. And I can't wait to be with you guys. All right. I'm not none of those guys. All right, everybody. It is 10:30. I hope everybody has a great day. Get ready for tonight and be excited. I am Mark Sebastian. I am your only option. Have a good one.